For many investors, 2022 felt like uncharted territory. Surging inflation, slowing growth, warfare in Europe, and escalating US-China tensions combined to create uncertain conditions. As a result, we saw equities and bonds sell off hard together for the first time in many decades. Amid these unsettling times, you may well be tempted to sit it out in cash. Will 2023 bring recession, recovery, or both? Will aggressive interest rate hikes persist throughout 2023? Is the US dollar set to get even stronger? And how might you position your portfolio amidst all this uncertainty? Outlook 2023 provides Citi Global Wealth Investments expectations for the coming year and beyond. We highlight key potential opportunities and risks and set out actions specifically for your portfolio. We expect 2023 to be a year of challenges, but also a changing economic environment. After we saw rapid monetary tightening in 2022, we expect to see global economic growth slow down and stall in 2023. We expect a shallow recession in the US and somewhat worse in other places like the Eurozone. By contrast, China could see recovery once its harsh COVID restrictions get lifted. Interest rates should also see a peak in 2023, with US inflation maybe falling to around 3.5% by the end of the year. Meanwhile, world trade might contract, and global earnings per share could drop by about 10%. So what might all of this mean for global markets in 2023? Financial markets always look forward. The sell-offs we saw in 2022 anticipate a worsening economic environment for about a year or so out. In 2023, therefore, investors' focus will shift to a recovery in 2024. That said, we're not expecting an instant transition in markets. Historically, equities have typically started recovering halfway through a recession. But the recession that we're waiting for has yet to hit, and markets have never bottomed ahead of a recession beginning. Nevertheless, we identify positive steps that investors may consider both now and for the recovery we anticipate later. We believe that 2022's difficulties have created a range of potential opportunities as well as risks. Amid rising rates, we favor investment-grade U.S. fixed income, and we want to see other opportunities to put cash to work, including, for example, select dividend equities and certain private market strategies for qualified investors. Going into 2023, growth equities remain vulnerable, but growth equities in areas such as technology are more likely to bottom before cyclical industries like industrials and basic materials. Once the recovery does begin, many non-US assets may also rebound strongly as their oversold currencies rise against the dollar. Looking longer term, we continue to seek exposure to the multi-year forces driving growth and innovation. These include the unstoppable trends of digitization, healthcare, and clean energy. Please note that investments in financial instruments or other products carry significant risk, including the possible loss of the principal amount invested. Outlook 2023 is your roadmap to understanding economic recovery, and we at Citi Global Wealth Investments will be with you every step along the way.